On a day when markets were destroyed by a jump in bond yields, Tesla didn't move down at a 2 times beta. It moved down, but even less than the NASDAQ. In fact, the move down was kind of not that much. And in fact, it was up for most of the day. Then as Meta and IBM came in after hours with beats, Tesla's now up in the after hours. Let's dig into the action in detail and take a deeper look at the implications of that General Motors continuing story. And now add to that the Ford story as they seem to be getting close to breaking through on the strike. This is Randy Kirk. Hit like, subscribe, and notify and all that jazz. And if you haven't bought one of these yet, how come? All the information is down below in the description. I'm considering turning my afternoon show into a pre-market analysis and inviting a different guest on each day, not ad infinitum. In other words, a different guest on Monday, different on Tuesday, and then that one on Monday would repeat the next Monday. So each night, 5 nights a week, I would have somebody different that would be with me talking about what happened that day. Kind of like the morning show, only after the action. What do you think of that idea? Would you let me know in the comments below if you think that'd be a good idea? It would appear at about 5:30. We would start shooting it at about 4:30. By the time we shot it and I put it up, it'd probably be close to 5:30. Anyway, thoughts, let me know. All right, let's start off with the after hours, the Meta and the IBM stories. Well, the IBM story, I didn't really go deep into that. They just beat top and bottom line handily. I didn't see what their guidance was. Meta had beat the top line, bottom line, they even beat in users, which everybody pays attention to in their case. And they also gave excellent guidance, kind of right in the middle of what was expected. That, of course, is going to lift all boats, as it generally does. However, of course, the thing that was hurting today was the bonds. We'll see the bonds could kill it all, as it did today. Let's drop back over to another subject for a minute, though. I want to talk to you again about housing because, all of us have got one, right? You probably own 1 or 2 or 3. The housing market is the one that's struggling the most right now. But today, you might have seen a headline, and I want to explain this headline and the impact of the headline. So new home sales, this is not existing home sales. This is sales of brand new, just built homes increased in September by 12.3%. However, that's a misleading headline because there was a big drop in August. So while new home sales were still at the highest level since February of 2022, they were really only up just a little bit over July numbers. Now, this is likely the last gasp of normal summer seasonal sales. And new home builders are not dumb. They know the season is over. I'm sure the incentives like mortgage rate buydowns were substantial. So where do we go from here on housing? As I've been saying, there's not going to be, now there's way fewer. I think it was a drop of 30% in new homes available for sale. We have no existing homes for sale. So now that market is going to be even worse over the winter. Yes, I think the prices will still come down because there just won't be that many folks that are going to pay the price and the mortgage levels over the winter. Even if mortgage rates stay at 7 to 8% or go to 8.5% next spring, there will still be buyers and prices will go up. I don't think that's where we'll be, as you well know if you watch this channel, but I'm just letting you know that there will still be buyers, as there was still lots and lots of buyers when mortgages were at 10, 11, 12%. I've also noticed a little bit of a twist, which is adjustable rates seem to be coming back into fashion. I'm going to have Bill Rayman on my show. If you're looking for a mortgage, you're thinking about ever buying a house or needing a mortgage, Bill's number is down below in the information in the description. And I'm going to have him on my show probably Saturday to talk generally about the housing market, the mortgage situation, the bond market, all this kind of stuff, how it all plays together. I think you'll find it to be a fascinating show. That's going to be on Saturday, probably. All right. From Reuters, Honda Motor and General Motors are scrapping a plan to jointly develop affordable electric vehicles, the company said on Wednesday. This was a $5 billion effort to try to beat Tesla in sales. So this coming a day after the other announcement about them giving up, basically. The decision underscores General Motors' strategic shift to slow the launch of several EV models to focus so they can focus on profitability as it grapples with the rising cost of the United Auto Workers strike, which surged to $200 million a week this month. Yeah, they said that the Honda decision had nothing to do with the strike. That's what they said. I don't know whether it's true or not. Mary, you're giving up. As I said this morning, if you didn't hear me below, they are betting on flip phones. They are definitely doing that. Okay. After extensive studies and analysis, we have come to the mutual decision to discontinue the program. Each company remains committed to affordability in the EV market, the company said in a joint statement. Honda said there's no change in its plan to sell only electrified vehicles by 2027, 2030, 2033, 2035. They are absolutely promising that this has not affected their decision to sell only electrified vehicles by 2040. The two firms agreed in April last year to develop a series of lower-priced EVs based on a new joint platform, producing potentially millions of cars from 2027 onward. The automakers have said the deal was for affordable EVs, including compact crossover vehicles built using GM's Ultium battery technology, which is no longer a pouch. I think I've heard recently it's going to 46, going to a cylinder. I don't know. Will they even make their own batteries? Who knows? Okay, after studying this for a year, we decided this would be difficult as a business to compete with Tesla. We are maybe and to compete with the Chinese. I don't know if this was supposed to be a Chinese car, probably going to be a Japanese. I don't know. Honda CEO was quoted as saying, at the moment, we are ending development. My thoughts. There just isn't enough margin left for these major OEMs to enter into joint ventures like they've been doing for the last 30 years. Tesla is taking all the slack out of margins with vertical manufacturing integration, elimination of dealer networks, dramatic reduction in the future opportunity of profits from sales of parts and maintenance, and no advertising. That is not to mention better use of capital and superior manufacturing capabilities, even before they add in Optimus and unboxing. Yeah, these guys have got to be, if they're studying at all, if they're paying any attention at all, they've got to be scared to death. I don't know how they think that they're going to do it when they've got two companies having to share in the results. It will be hard enough for even the Chinese makers to compete with Tesla with that list I just gave you, let alone the US and European manufacturers. It just doesn't, it's hard to imagine. All right. Looking, but not finding a reason for the bailout on bonds. Conspiracy, you know, the bonds went down during the week and then they bounced back. When I say the yields, the bonds went up earlier in the week and the yields went down. We, of course, believe that that was a pretty much all Bill Ackman's fault. He said he was cashing out on his shorts. Therefore, he didn't expect yields to continue upwards, and the bonds yields just dropped like a rock. And then they started coming back up again today as the bond sell-off continued. Now, a conspiracy theorist might think that somebody had some inside information on the PCE print that's coming on Friday, and that maybe it's going to be higher than expected, and this will throw into the potential pot that maybe the Fed will have to raise rates in November or December. I think what we're looking at is a momentary blip that was caused by the Ackman statement in this move towards 5%, but not over, and eventually under. And when I say eventually, short term, maybe even Monday, based on the PCE print on Friday. Okay. So we have the Treasury, but what we have is, what the difficulty here is that we have the Treasury creating massive supplies of new available Treasury bonds. And the Fed isn't buying any of them. In fact, they're selling. And you have China selling, not buying. And you have Japan on the sidelines, some of the biggest buyers of bonds, by far bigger than the average US citizen. These guys have buying power, and they used to be buying, and now they're actually not they're selling bonds. So the supply demand problem could overcome all of the other issues that normally determine where the bond rates go. On the other hand, if the market believes that we have inflation at 2.5%, which is where true inflation is, and where a lot of other people, a lot of other smart folks are saying they believe it is, and they really believe that it's going to continue down, as I do, into actually deflation, then the bargain hunters will come in at this 5% level. Why 5%? Because it's a round number. Believe me, it could be 5.1, it could be 5.2. It's a round number. 5% means nothing. But multiple voices, I can't tell you how many articles I've read in the analyst and pundit classes this morning, are suggesting that we are looking at 5% 10-year rates for a while. I don't buy that, but a lot of them are saying it's 5% for a while. But guess what? I think I mentioned in this morning's show, 5% is the average over the last 100 years, actually 5.1. This is not an unusual rate. It won't kill the economy. I'm continuing to believe that we'll head back down to 4.25 because inflation is under control and going into deflation. So there's no way that the folks who buy bonds are going to have a real rate of this much, because there are too many bargain hunters out there that are going to take advantage. So a Patreon member asked the question, what are the consequences of long-term rates above 5? How will markets react? Okay, there's no economic issue above 5%. Okay, we talked about being an average of 5.1 over 100 years. We also know that there was over 5% in the 2000s, early 2000s. It was way over 5% in the 1990s, and much higher over than that in the 70s and 80s. So you can have a super strong business climate even with rates well above 5%. The issue right now is with the rapid change. There has never been this quick of a change, and such a dramatic change from almost 0 to 5% within 18 months. And when change like that happens, it creates uncertainty, and the market hates uncertainty more than anything else. And a rapid change means that consumers and businesses need to react. They need to respond. They need to get used to it. I'm used to 0%. That's what I'm counting for. And all of a sudden I got to pay 5%, or, I'm a prime borrower. And so I was paying 3 and now I'm paying 8. It's a difficult transition for companies to make and businesses to make, but most of all, it's a big transition for the US government, and people are paying to that as well, to that problem as well, because it adds to the deficit, and it adds to, deficit spending by year, and it adds to the overall federal debt rapidly. And the federal debt is going up like this already because of the spending of this administration that is now being exacerbated by spending on 2 wars. Well, and I'm not making any commentary there with regard to whether we should or shouldn't be involved in those 2 wars, but we are spending a lot of money on those 2 wars. Okay. However, if bonds start moving up and therefore yields down, the market will happily reprice in the fact that the bonds are moving upward again, and the rates down. Right now, they're trying to reprice for a new reality. They saw bonds heading up the other day. Now they see them going back down again, and the rates going up again. They have to reprice that possibility of 5%. Treasuries, having nothing to do with what the Fed rate is, the treasuries are at 5% or more, maybe for a while. So they're repricing that in right now. But that could change it could change Friday. And it could change next Wednesday when the Fed speaks. Anyway, Multiple reports are coming in tomorrow, so you don't want to miss the morning show. UPS is going to be reporting before the bell. I think Ford is also reporting before the bell. Those are going to be two interesting things. As I mentioned, Ford seems to be this close, maybe to making getting together with the UAW and having an agreement. That's what I just read before we came on. So 7:10 in the morning. Also, let me know what you think about this idea where we would have a show at about 5:30 that would kind of mirror the After the Bell show, except the big difference would be, I mean, the main topics would be the same: Tesla news, Tesla stock news, economic news, and how all of that's impacting markets. So the subject matter would be the same, but each day there would be a guest that would help me with that show. And it would be at 5:30. Actually, it would only be 4 days. I may have misspoken a minute ago. It would be Monday through Thursday. The Good News Friday show would continue on. That would either be right now this with Larry Goldberg, and as far as I know, that'll continue that way. All right, let's see. Yeah, that's about all I got, except to remind you to get your Cybertruck. Whether you do it through Patreon, you join Patreon at the $10 level and get it for free, and also get news. There's already been at least 2 breaking news stories that I've put up there today. If you'd like to get those breaking news stories when they happen, when they're hot, when they're actionable, instead of a couple of hours later, 3 hours later, then Patreon, $5 a month. That's all it's going to cost you, and you become a producer of the show. You help to make the show possible. And thank you. There was at least one more Patreon member that joined this morning. If you join at the $10 level, you get one of these babies, one of these really cool bottle openers and refrigerator magnets for free. Otherwise, pay your $25 to paypal.me/Randy Kirk, all in lowercase letters, and let me know whether you want the plain or the regular or the, however you want to call it, the stainless steel version, or whether you want the camo version. Let me know which one you want. And if you're outside the country, add $20. Yeah, I think that's all I got for you right now. I might be back later today with a quick show, just to kind of, again, take one last look at this market today, because this is a critical week. That's why I've been reporting on the markets as much as I have. And I might be back around 5:30 with or without a guest, probably just me, but with a quick analysis at the end of the day. That's all I got for you right now, though. So it's been great talking to you.